On November 27th, hundreds of workers at LG Display Guangzhou Co. Limited staged a strike and gathered in the factory complex to protest against their treatment. The protests were sparked by LG Group's decision to sell the facility to TCL's subsidiary, CSOT, China Star Optoelectronics Technology. Over 500 workers are expected to be laid off or reassigned during the transfer, with potential layoffs affecting up to 1,000 employees. Workers voiced strong dissatisfaction with LG Display's severance and compensation plans, which they felt were inadequate and unfair. It is understood that LG Display Guangzhou consists of 3 main factories: the large-size LCD panel plant, the LCD module plant, and LG Display Optoelectronics Technology China Co. Limited. These are LG Group's key overseas production bases, mainly manufacturing LCD and OLED modules for computer monitors and TVs. Established in June 2006 with a total investment of $4 billion, LG Display Guangzhou was the largest foreign-invested high-tech project in the city at the time. It became a significant player in the development of the Huangpu district and once had a production capacity valued at 5.45 billion yuan annually. In September this year, LG Display announced it would sell 80% of its large-size LCD panel plant and 100% of its LCD module plant to TCL's CSOT for 10.8 billion yuan, about $1.54 billion US, with the deal expected to close by the first quarter of 2025. As part of the agreement, LG Display will retain its OLED production at the optoelectronics factory. The layoffs primarily affect employees in the panel and module plants OLED and MNT mobile network terminal divisions, while TV-related staff at both the panel and module plants will be transferred to CSOT. During the factory's transition, LG Display offered 3 severance options to affected employees. 1. Voluntary transfer to the nearby optoelectronics factory was a relocation incentive of 5,000 to 10,000 yuan, based on seniority and position. 2. An open window for transfers between November 9th and December 8th, though without the relocation incentive. 3. For those unwilling to transfer to the optoelectronics factory, workers could negotiate severance packages after November 9th, with compensation calculated using the N formula, where N represents the number of years worked multiplied by the average monthly salary of the last 12 months. The compensation plan was met with strong opposition from the module factory employees. Many compared the plan unfavorably to severance packages offered at other LG Display facilities, such as the one in Korea, where employees leaving voluntarily were offered about 36 months of salary. In China's Yantai, employees were offered N+1 plus double year-end bonus. In comparison, the Guangzhou plant only offered the basic N compensation, with the added condition that employees who wanted to receive holiday bonuses had to resign by November 29th. Many workers called for the compensation to be raised to 2N. As tensions escalated, disrupting factory operations, local labor authorities intervened. After negotiations, on November 28th, a new compensation plan was agreed upon. For employees unwilling to transfer to the optoelectronics factory, the severance package was enhanced to include 1 additional month of employment preparation funds and the year-end bonus, resulting in a compensation formula of N+1 plus year-end bonus. Reactions to LG Display's new plan were mixed. Some argued that as a Fortune 500 company, LG should show more corporate responsibility and generosity in its compensation practices. Others believed that, as a business, LG Display was only required to meet legal standards and comply with labor regulations. Online discussions reflected these differing views. Some commenters pointed out that the N compensation package was in line with local labor laws, suggesting that any additional compensation would need to be negotiated. Others argued that LG Display's actions were not unjust, noting that in the event of a company's closure or downsizing, Chinese firms often provide less generous compensation, sometimes forcing workers to resign voluntarily to avoid paying severance. Comparisons were also made to the more generous severance packages offered by other foreign companies. For instance, when Samsung exited China in 2020, it offered employees N+3 compensation, along with new smartphones and other gifts. Microsoft's departure from China reportedly included an N+12 package, and Oracle's massive layoffs were accompanied by N+6 severance. These cases illustrated the greater compensation often provided by foreign firms, which are seen as adhering to higher standards than domestic companies, especially in the context of factory closures or layoffs. In contrast, domestic Chinese firms, especially in the wake of the pandemic and geopolitical tensions, have frequently been criticized for offering minimal severance, often pushing employees to resign voluntarily, or resorting to coercive tactics to force resignations. Some companies, having gone bankrupt, would even leave workers unpaid for months without any severance. In comparison, LG Display's compensation package was viewed by some as relatively fair. LG Display was once the largest manufacturer of LCD TV panels, with its Guangzhou panel plant producing large-size LCD panels for TVs and commercial displays. Meanwhile, the module factory specialized in LCD display modules. The panel plant had a production capacity of 180,000 large panels per month, while the module plant could produce 2.3 million display modules monthly. TCL chairman Li Dongsheng explained that the sale was part of LG Group's strategic withdrawal from the LCD display market in favor of OLED technology. A professor of economics at Jinan University, Liu Jinshan, noted that LG Display's decision to exit the LCD business was likely driven by global supply chain restructuring and the declining profitability of LCD production, making the move to focus on OLED a strategic optimization for the company. The domestic LCD panel industry has faced significant overcapacity in recent years, driven by heavy expansion from local Chinese manufacturers. In 2022, the industry saw widespread losses, contributing to a sharp downturn in panel prices. While LG Display's Guangzhou plant remained profitable in 2023, LG Display as a whole has struggled with declining earnings. In its third quarter financial report released on October 23rd, LG Display reported continued operational losses due to one-time costs related to labor efficiency improvements, bringing its cumulative losses for the first 3 quarters of 2023 to 643.7 billion Korean won, approximately $4.6 billion US dollars. However, LG Display's OLED business has been growing. With the increase in OLED shipments for smartphones, LG Display's third quarter revenue showed growth, with OLED products now accounting for 58% of its total sales, up by 16% compared to the previous year. In recent years, LG Display has been undergoing a strategic business restructuring, shifting focus from LCD panels to OLED panels. The company aims to expand its OLED production capacity, leveraging its supply capabilities and technology to strengthen its competitiveness in the mid and small-size OLED market. However, the high capital investment required for OLED technology, coupled with the need to improve its financial situation, has prompted LG Display to divest its LCD business. This move is expected to streamline its operations and consolidate resources for further growth in the OLED sector. The decision to exit the LCD market follows a broader trend among Korean and Japanese manufacturers. Samsung, for example, sold its Suzhou plant to TCL in 2020, while Sharp shut down its 10th generation LCD line in August 2023. LG Display's sale of its Guangzhou facility marks another major shift, signaling a complete departure from the LCD television panel competition in favor of OLED technology. The global panel industry has seen significant changes this year, with Chinese companies now dominating the supply of LCD panels. As overcapacity continues and demand for large-size panels remains weak, competition among Chinese manufacturers is expected to intensify. The competitive landscape surrounding the sale of LG Display's Guangzhou factory also reflects this shifting market dynamic. According to industry sources, China's largest LCD panel manufacturer, BOE Technology, was also interested in acquiring the Guangzhou factory. However, TCL's offer, supported by a complex network of stakeholders, including Samsung, which is a key client of LG Display, was ultimately more attractive. Analysts suggest that by selling the factory to TCL, LG Display avoided potential tensions between Samsung and BOE, which has had ongoing legal disputes with the Chinese company over patent infringements. With TCL's acquisition, the Guangzhou factory will continue to produce IPS panels, and all of Samsung's previous LCD panel orders with LG Display will be transferred to TCL's CSOT. Additionally, LG Display's LCD-related intellectual property will be transferred to TCL. This acquisition allows CSOT to enhance its competitive position in the LCD market, especially against rivals like BOE. Some industry insiders have expressed concerns over the acquisition of LG Display's Guangzhou LCD plant. The 8.5 generation panel line has been in operation for nearly 10 years, with many of its facilities approaching the end of their life cycle. The LCD plant that TCL recently acquired may be considered outdated capacity. Additionally, the LCD industry experienced an overcapacity crisis and losses in 2022. Given this backdrop, the acquisition of LG Display Guangzhou's line raises questions about future demand and profitability challenges. It is worth noting that during the transition of the Guangzhou factory, LG Display managed to maintain normal operations without halting production. Furthermore, with recent price increases in LCD panels, the company's performance has improved. As a result, some industry experts predict that the final acquisition price could increase. On November 30th, new information emerged. According to the Guangzhou Equity Exchange's official website, Guangzhou Development Zone Holding Group Co. Limited plans to transfer a 20% stake in LG Display China Co. Limited. The minimum transfer price is set at 2.6 billion yuan. This news has raised questions about LG Display's future direction, with some speculating that the share transfer by Guangzhou Development Zone Holding Group might be a preparatory move for further transactions. Additionally, as previously mentioned, LG Display Yantai Co. Limited has been laying off workers, with plans to reduce its workforce by approximately 20%. The company is offering a voluntary retirement option for employees, with a cap of 400 slots. LG Display's Yantai plant, established in May 2010 with a total investment of $474 million, employs over 2,000 people. It is the largest Korean invested enterprise in Shandong province. The plant was originally for the research and production of display components for smartphones and smartwatches. However, in recent years, LG Display's strategic shift, the Yantai plant has scaled back its smartphone business and now only produces display components for smartwatches. The layoffs at the Yantai plant reflect LG Display's strategic contraction. Since the onset of the US-China trade war in 2018, many foreign companies, including LG, has moved their supply chains out of China to avoid high tariffs. This trend has been especially pronounced in LG's products, such as refrigerators, air conditioners, televisions, and semiconductor chips, which are now manufactured either in South Korea or moved to other countries like Vietnam, India, and Mexico. Rumors have circulated that LG Electronics and related industries will eventually close all manufacturing plants in China, with the exception of LG Chem Limited. Public records show that LG entered the Chinese market in 1993, but its presence has significantly shrunk in recent years due to a series of asset sales and withdrawals. In February 2018, LG exited the Chinese mobile phone market, marking the beginning of a broader pullback from China. In February 2020, LG sold its iconic LG Twin Towers in downtown Beijing, signaling its commitment to withdrawing from the Chinese market. In August 2020, LG Electronics closed its physical stores in China, operated in partnership with domestic retailers Suning and Gomei. This decision was driven by the pandemic-induced drop in consumer spending, particularly in the home appliance sector, where LG's TV sales also plummeted. At the same time, LG Electronics accelerated its online sales effort in India to counter the downturn in China. In July 2023, it was reported that LG Innotek, a major electronics parts subsidiary of LG Group specializing in camera modules, would gradually move its camera module production lines out of Yantai plant to Vietnam's Haiphong and South Korea for flagship product manufacturing. By 2022, procurement from the Yantai plant accounted for only 3.8% of LG Innotek's total purchases. In the wake of the significant geopolitical shifts since the re-election of Donald Trump, who vowed to increase tariffs on China, foreign companies like LG have expedited their withdrawal from China, redirecting their investments to Southeast Asia, including Vietnam and India. According to foreign media reports, on November 19th, LG Display announced plans to invest $1 billion to further expand its OLED panel production capacity in Vietnam. This will bring LG Display's total investment in Vietnam to $5.65 billion. The expanded OLED factory, located in the northern coastal city of Haiphong, Vietnam, has been under construction since 2016, with capacity upgrades occurring multiple times. In 2021, LG Display committed an additional $750 million to expand OLED production. In June 2022, LG Display announced it would raise $1 billion from global financial firms to expand its OLED module production lines in Vietnam. According to South Korean media outlet Business Korea, LG Display's goal is to strengthen its position in the global mid and small-size OLED market. While LG Display is the undisputed leader in the large OLED panel market, its share in the mid and small-size OLED market is only around 12%, far behind Samsung Display's 73% share. Months earlier, Samsung Display had also announced plans to invest $1.8 billion to enhance its production capacity of OLED panel factory in Vietnam. Following this investment, Samsung's total investment in Vietnam has reached $22 billion. On the same day, November 19th, sources revealed that LG Electronics is considering building a new home appliance factory in Andhra Pradesh, India, with construction expected to begin in the first half of 2026. LG Electronics stated that, given the enormous growth potential of the Indian market, the company is exploring several investment expansion options, but no decisions have been made at this stage. Earlier, in September, LG Electronics was also considering an initial public offering for its Indian business, aiming to leverage the booming Indian stock market to help achieve its goal of generating $75 billion in electronic business revenue by 2030. In addition, LG Group is actively expanding in Southeast Asia. On November 25th, industry sources revealed that 3 LG subsidiaries, LG CNS, LG Electronics, and LG Energy Solutions, have formed a team to secure a $300 million artificial intelligence data center contract in Indonesia. The project, targeting completion in 2026, involves a partnership with local Indonesian companies. They have plans to extend the initiative to neighboring countries such as Singapore, Malaysia, and Vietnam in the coming year. On July 6, 2023, LG Electronics announced the establishment of its first overseas R&D center in Indonesia, dedicated to television product development. This move is part of LG's strategy to expand its presence in Southeast Asia, aiming to improve R&D efficiency and better meet local market demands. As LG Electronics increases its TV production in Indonesia, the company plans to gradually expand its R&D workforce to 500 people by 2025. LG Electronics has already established Asia's largest TV production base in Indonesia, and the new R&D center will further enhance the company's innovation and competitiveness in the region. By staying closely connected with local markets and aligning with consumer needs, LG aims to deliver more competitive and innovative products in Indonesia and surrounding areas.